And welcome out to our halftime report here, 12/7/2018, the anniversary of one of the most, famous days and infamous days in the history of our country and probably the world map. Pearl Harbor was this date in 1944, I believe. Is that right? Or 40? Yeah.
Yeah,
Um,
what time in the it was like 7:15,
7:55 in the morning was the
7:55,
first
that's right.
attack. Yep. And then
7:55.
majority of attacks had all taken place and ended before 9 a.m.
Yeah, it's an amazing historical situation, no doubt. I mean, Pearl Harbor to that generation, 9/11 to our generation. I mean, just historical situations, but an amazing day in history, and a day where, a day that will live in infamy is, I believe, the statement that FDR gave at the time when he stood in front of Congress and declared war on the Japanese Empire, and then the next day on December 8th, the German declared war against Germany as well. So, yeah, definitely a day of remembrance. So let's keep our mind on them today.
have you had the chance to go to the Pearl Harbor Memorial, Matt?
I have had a chance to go to Pearl Harbor Memorial. I didn't get a chance to see as much as I wanted,
Mhm.
but yeah, it's an amazing emotional situation, no doubt.
Did you
Cody,
guys make it out here on the platform?
I did
'Cause they,
not.
yeah, they
No.
made they shut the platform down now, so no one can ever go on that anymore. You just kind of circle. I
Mhm.
was curious if either of y'all made it on the platform before they closed it.
Yeah, I
No, I
did
did not.
actually. What's interesting about that, Cody? I felt kind of eerie and strange when I was on that platform because that's literally a graveyard, right? I mean, that's like you're on where some men and women who served for our country literally are buried underneath that ship.
There
So
was over 2,000 deaths that day, half of which were from the USS Arizona. So yeah, 1,000 people right there.
it's always good to remember history and kind of the context of it. I'm going to sit my kids down at some point today and talk to them a little bit about that. Definitely a day always grabs my attention, no doubt about it. Let's work through the markets here today.
What's
Now,
your
by the
real quick? What's your favorite movie about Pearl Harbor?
Ooh, that's a good question. I don't know. The Ben Affleck one called Pearl Harbor actually comes right to mind. I do like that
That was
one.
actually a decent movie outside the weird love triangle. Um,
Sure.
The weird
Tora,
love triangle is true.
yeah, Tora. That was one that happened afterward, but Midway, the Battle of Midway. But there's some great movies about him.
I don't even know all the Pearl Harbor movies that come to mind now. And I mean, you mentioned Tora. I do remember that one. Dad sat us down and made me watch that when I was a kid. That's a great film. So maybe I have to go look them up and see what other movies are out there that are great, Pearl Harbor movies, kind of put it in context and also teach. I think that'd be cool. Yeah.
I agree with Matt on the Battle of Midway because that was the big thing after Pearl Harbor was us holding that Midway line.
Mhm.
Oh, that was the turning point. The
Yep.
Battle of Midway was the turning point for the war in the Pacific, no doubt about that. But yeah, these types of days, it's always important to remember, right?
Mhm.
And never forget. I think as the saying goes. So, on to the S&P 500. We can debate movies later.
I agree. Definitely interesting market conditions, Matt. The markets turned bearish this week after the gap out on Monday morning. We settled in. It failed to hit resistance. Tuesday was an incredible down day. And now here we are on a Friday after all the news, all the different expectations, the rhetoric back and forth about tariffs and China and Trump and this and that. And we're sitting on support looking, not very, very good. What's your read technically, first off?
Yeah, first of all, that recovery in the market yesterday was something to behold. I mean, snapback rally, and it's like I said yesterday to you, Tim, when we got done with the halftime report. It seemed like this is the algorithms playing out in the battlefield of bulls and bears and so on and so forth. And ultimately, the only thing that is important in this market is those ultimate levels of support and resistance. And until those levels of support and resistance are broken one way or the other, whether it's
Mhm.
2,800 to 2,820 on the upside or 2,600 to 2,625 on the downside, we're going to see some volatility. We're going to see some randomness, and we're going to see the markets move quite rapidly. Obviously, the news of today was the unemployment report. The unemployment report came out earlier today. Let's go ahead and show that very quickly. So when you're looking at Forex Factory, I got a lot of stuff there, a lot of economic activity this week. Let's remove all those Fed speeches, though. Here's the unemployment report right now. Average hourly earnings slightly down. Big miss though on the actual non-farm employment change. We were expecting coming in at 298. The previous was 237. Only came in at 155,000 new jobs coming into there. So obviously a miss from an economic reporting perspective. And just to kind of show you how the market responded to that, that came out at 8:30 a.m. earlier today. Here's the market on the intraday here, and here's where the announcement comes out. And as you can see, the positive reaction was initially to the unemployment report, and some of you might be like, wow, a negative report, but a positive reaction. Yes, good news, bad news is good news, that type of thing. If it's negative news, some people in the market believe that the Fed will come off their more hawkish stance of interest rates. And so that's kind of what led that initial charge up. But ever since the cash open coming into here, Tim, felt breakout of 7,200. And this is important. When you have that breakout of 2,700, everybody's looking at that as a potential day trading trigger. Everybody is. And when that falls out, capitulation starts happening, and you saw the market come back down off that negative report. So, par for the course, given what we've seen over the course of the week, Tim. The whipsaw has been fully in effect this week, and I don't think we're getting any more clear picture of where this market wants to go this week.
Definitely wants to go down. We're closing the week on the lows. Further breakdown patterns would be significant. Last week in the scouting report meeting, I remember talking to Coach Mark and our brother, and he was saying, as I look through all the different things in the market, my expectation is down, and this is the reason. The path to least resistance in those bear retracements was pretty clear, whereas the market to get bullish had to break and run, Matt. And that's a more difficult equation, right? So even from here, to break a major support zone would be significant. I wouldn't say, you can't count it out here on a Friday, but now we're halfway through the day. I don't expect that to happen today.
Oh, and neither do I, but you can't. It wouldn't shock you to see 2,600 broken today.
No, it wouldn't.
But it would be something crazy, right? I mean, it would be something crazy, and I don't expect it to happen either. I mean, the market is starting to settle in coming into the halftime, Tim. You're starting to see it settle down a little bit right here after that initial movement. Now it's starting to pick back up a little bit. So it's going to be interesting to see if it can get down to that 2620 level where it was yesterday. But given what I believe that's happening at 2620, Jim, I think there's a lot of algorithms already programmed at 2620 to start buying. So it's going to be interesting to see how the market does respond off those levels.
One really good note, and you do a really good job explaining this. I remember a couple of months ago in a halftime report, you talked about the difference between expectations and results, and that's why markets react. I saw a comment in our clubhouse, why is the market going down when we got 3.7% unemployment and this and that? And it was a little bit like that. And It's a normal question from new traders, by the way, and people have asked that a lot. Here's the reality, Matt. We did build 155,000 jobs, but we expected 200 plus. Last time we had 298, like you said. We did have a rise in hourly earnings by 0.2%, but the economic expectation was 0.3. So subtle miss, right? So the report was not a strong report. It came in and it missed expectations. Markets are down here.
It goes back to that same equation of a lot of new traders, and quite frankly, people in general who don't understand, market dynamics. We'll just call it like that. And they look at the economy and they say, okay, the economy in the second quarter had 4% GDP, and in the third quarter we had 3.3% GDP, and that's a good economy. But guys, we've seen that in the past, right? One quarter doesn't make an economy. That's number one. Number two, the unemployment report is only one portion of the economy. It's not, building permits and new home sales and existing home sales, which have been down, by the way. In fact, California last month had a nasty drawdown. So, manufacturing data, consumer confidence data, retail spending, there's so much that goes into the economy, but the number one factor in the economy is not unemployment. It's not inflation. It's what the Fed is going to do with monetary policy. And then it's what the government is going to do with fiscal policy. So monetary policy and fiscal policy, that is 1A, and I don't even want to give fiscal policy 1B, but we saw how tax cuts and the anticipation of tax cuts can really drive market dynamics. So when you're looking at the economy versus the market, and downtown Josh Brown, who's on CNBC, I seen him put out a tweet a couple weeks ago, but and I've heard this analogy before, but it's a really good analogy for the stock market versus the economy. And it basically goes like this, Tim. The economy and the stock market will move in line with one another, right? To the same degree that it's like you're walking your dog. And let's say, Tim, you go out when you walk Max, right? Your boxer, or you go walk Sadie, your Great Dane, and you have him on your leash, right? And you're walking in a straight line. Okay. And your dog, you have it on the leash, it's going in that same subtle direction that you're going. We'll say north, right? You and the dog are both going north, but the dog isn't exactly going in line with your step by step. The dog's peeing on the hydrant. It's barking at another dog. It's chasing something. It's looking somewhere else. The dog is the economy. It goes in line with the market, but it doesn't go in line the entire time. And another thing to think about it is the economy is lagging. The market is like a leading indicator to where they think the economy is going. And so if the market participants believe that we're going to slow down growth in 2019, the market's not going to go up simply because we have a good economic report in the current environment if every bit of analysis leads to slowing growth in 2019, right? So it's the market is always forward thinking, and every economic report is always lagging. It's always backward thinking. It's almost to the same degree as historical volatility in comparison to implied volatility, right? Historical volatility is the actual volatility of what transpired in the past. Implied volatility is what the traders think volatility is going to be in the future. The stock market is forward thinking. The economy is backward thinking. That's why the stock market doesn't have to move in line with the economy.
You know, top 5 gainers on the S&P. You tell me if there's a theme here, Matt. I'm looking. Where in?
What should we just Verizon?
I had it. No. Helmerich and Payne, EOG, EQT, Chesapeake Energy, Concho Resources, a lot of oil companies, Matt. OPEC did announce that they have some kind of deal that they're working through. We will get to the oil deal here in just a minute.
Yeah, we'll get into that in a second.
Yeah, but obviously energy companies are rebounding, Matt. Let's give me a couple of charts on these two. EQT, if you would. Little $18 stock, kind of rebounding off the low after a big gap down. That's still an ugly chart. Obviously,
3% after an 80% drop is not exactly buying opportunity.
HP, Helmerich and Payne.
If you do trade EQT, though, keep an eye on how it responds at about $20 and how it responds as it gets above that 20-day moving average. The second one?
HP.
Helmerich and Payne.
Same thing. Nice recovery. Gap up here. Look, you have to even kind of squint to find that doji candle, Matt.
You did.
Gap up on the news. Yeah. Red candle, not exactly strong.
Nothing there.
CHK.
This Chesapeake, right? CHK, excuse me. Again, 2%. Look at that, 2%. You're like, wow, no. Go.
See, and here's an example where the headlines in oil and energy are going to grab the news today. In fact, by the end of the day, what's going to happen? They're going to say oil soars, energy soars. But when you start breaking down the individual components, which, by the way, if you're a loyal halftime crew member, you realize, when you go to the individual components in the sector, the industry, or in that index, it starts to paint a much clearer picture on what is going on, right? Energy recovering, it's ugly.
Immediately following the report today, I'm going to be doing my research for the scouting report. And I won't look at XLP. I won't look at XLI. I'm going to break down every stock in that component to get a better understanding of exactly what that sector is doing.
Sure.
And I'm not, and the sector trend in XLP, XLI, XLV, K, and all those sector spiders, it gives you a very good understanding of the overall sector. But when you break down each component of that, it does give you a different picture sometimes.
And by the way, I want to welcome everybody out from the halftime crew, Matt. Good attendance here today. If you're here and you're watching our show, make sure you subscribe and click the bell. It's always good on a Friday when the markets are volatile to come in together and kind of break down the markets. By the way, a very important teaching is Friday Fun Day, Matt. Are you having fun today, by the way?
Yeah.
Me too. Yeah. I'm fired up for our topic. And
so am I.
Yeah, you set that up a little bit. We're going to be talking about it about a half an hour, but I think it's a critical topic to kind of set up and prepare
Well,
for.
we better get into it before a half hour. We're going to be here for a while. It's a big topic, but the topic today is beta weighting, delta, portfolio, and how to use the portfolio journal, basically. So understanding portfolio structure, using the portfolio journal. I'm sure we'll talk about beta weighting, delta weighting, and all that jazz as well.
Well, you think about it, we're going through our market analysis, Matt, step by step, daily routine style. Whenever we do the halftime report, guys, if the market's bearish, your portfolio should be bearish. And if the market's bullish, your portfolio should be bullish. And if it's neutral, it should be neutral. The Tackle Portfolio Journal allows you to understand that better with numbers and keep a record of it to make sure that you're at least trading logically in the market. I think it's an important tool. Let's go on to the Dow Jones Industrial, and I will put my foot on the gas here a little bit. We can talk NASDAQ or Dow, either one. Dow and the S&P are almost identical, Matt. There's only two companies going up today. Same read, pretty much?
Yes, same read.
Yeah, the only two stocks going up, Chevron and Exxon, the energy stocks like we talked about. Obviously those two are going to go up when crude oil is going up 4% like it is here this morning.
There it is.
What do you make of that OPEC deal?
I haven't read the parameters yet.
Well, basically, the hint is that they have a deal. In fact,
no. They have the same nonsense they had yesterday and the day before. But the parameters I'm specifically talking about is what level of cuts, because I know Russia and Saudi Arabia were not seeing eye to eye on the level of cuts. Russia wanted a little bit increased in cuts. Up to 1.5 million barrels a day. Saudi Arabia wanted to stay at about 1 million. Obviously, Saudi Arabia is bending the knee to Trump here. That's what Saudi Arabia is doing. Trump wants to see oil continue to go down. I don't know why, but he does. And he's putting pressure on Saudi Arabia to keep pumping the oil out there, despite the fact that we have limited demand worldwide. Russia wants to see about 1.5 million barrels cut. Many other OPEC nations do as well. Saudi Arabia is holding tight. I haven't seen that they came to a conclusion on that yet.
0.8 million barrels per day from now till January. They're going to try to curb output, and then 0.4 extra million barrels per day down the road. I'm looking at
up to 1.3,
1.2, 1.3, somewhere in there is where the cut is.
Yeah. Shocking. A negotiation splits the mid.
Split the middle on the negotiation. Yeah. Interesting.
That's what the algorithms, Bitcoin, Ethereum, crypto, that's what crypto should do, is just handle every negotiation and just obviously split the mid.
That's it. All right.
Crypto, you mean the thing that's down 5.5% today?
Yeah, it's only usage anymore.
They're getting killed lately. There's no doubt about that. We can look at Bitcoin here in just a minute. Go back to the NASDAQ for a minute, if you would. Cryptos, obviously the cryptocurrency market is in a bear market.
The only person holding crypto anymore is people that don't understand any dynamic about anything.
Hodl, Matt.
Hodl forever. Hodl to zero.
Yeah, it's true. Not a Bitcoin fan.
Worst off, I had a friend ask me, they're like, hey, it's down a lot since where it was. Should I buy now? And I was like, do you want to catch a falling knife? Like, what does that mean? I was like, Google it. I was like, just Google it.
My God, people, for the love of God, take a second, take a deep breath. If it goes from $20,000 down to $3,000, that's an 85% clip, right?
Mm-hmm.
Okay. So can Bitcoin go down to $500 a coin?
Yeah.
Yes.
That's the exact same loss. That is the exact same loss. There's no difference. It has nothing to do with the price of an instrument. Tell them to get educated before they buy anything. My Lord Almighty, just lose money left and right.
C'est la vie, brother. I mean, people have been making mistakes in investing for a long time. That's where financial education comes in, right? You got to have.
Okay, but it's simple math, Tim. Yeah. If you buy it at 20,000, it goes down to 3,000. You lost 85%. If you buy it at 3,000, it goes down to whatever 500 or whatever. You lost 85%. It's the same percentage loss. It's the same total dollar loss.
Right. So buying on a falling knife, this is like buying GE right here, by the way. I can say this. Oh, GE or Bitcoin. I don't know, man. That would be tough debate.
Both of them should have had a stop loss under $6,012.
They are the same chart, by the way, if you look at them.
Very. You're the first person who's ever done a GE correlation to the drop in Bitcoin.
It's true. Yeah, they are
so for all the crypto fans, it's GE's fault.
Blame GE.
Blame GE.
Give me the NASDAQ. Obviously, tech is getting killed here today. We're very, very bearish on tech. If you remember the newsletter from last weekend, the big debate is where do we put the communications sector?
On with the probability cone. Look at that.
The market can't figure it out. That's a Snapchat probability cone.
That's a Snapchat probability cone right there. That's right.
Yeah.
There's no difference here, Tim. It's all the same. I mean, market's down today. It's holding support levels. The only difference between the NASDAQ and the larger indexes in the Russell, not the Russell, but the S&P 500 and the Dow Jones is just this trend line right there. That is the only difference here. That's it. On the other ones, you have horizontal resistance. On this one, you have vertical downward levels of resistance. That's why the NASDAQ is weaker than the rest.
And Coach Emily, you are dang straight. I will bring up GE every day from now until the day that it's dead, or until it changes its fundamentals. If they do change, Matt, I will give them credit and trade what I see. But for right now, it's ugly. Matt, one company that is up today, the number one gainer on the NASDAQ is Tesla. We were talking Tesla every day there for months. We haven't brought it up here for a little bit. Bring me Tesla up. Tesla, in fact, we were going through cover calls and we're like, well, what stock could you play? Like, well, man, Tesla's up. And obviously we were joking. It's not.
Tesla's the new safe haven.
Yeah.
Okay. So when you want to protect against the all everything debt bubble, go buy a company that is based on all everything debt. It's the new safe haven.
Yeah.
Look at that.
Poor Tesla. It's ugly.
Poor Tesla. Yeah, I never did get my trigger under 250.
It never did. I still would be bearish. It's such a complex chart. There's no doubt about it because it's got gapping personality. It's inconsistent. It's hard to measure. The reality is we are at resistance, though. It's been in an uptrend, counter trend the market. Why is it performing so counter the market,
I have no clue. Listen, I know I'm the analyst here, and I know that's my job. I get that. And every now and then I'm just, you guys, I pride myself in giving you the unfiltered truth, right? And I'm not too big of a man to admit that I have no clue. I have zero clue why this company's going up when the market's going crazy.
Russian collusion.
It makes no sense. Russian collusion. Yep. Russia's colluding with Elon Musk.
Well, the news here today is that they actually are going to sell some stock in a cash mix to pay off some of their bond debt that they owe in March. And there was some concern whether they could even pay that debt. They're a debt-driven company, Matt. They're going to issue stock for it.
Okay, wait. They're a debt-driven company that almost shut their doors earlier this year because of their debt-driven business. And so they're going to issue more debt to buy more shares?
Mm-hmm.
Oh, God.
Give me LUV, Southwest Airlines, another company on the NASDAQ and the S&P, actually up this morning.
Which one?
LUV, if you would.
I'm still disgusted based on what you just said.
Now, it's actually starting to go back down. The airlines are all taking it on the chin after that crude oil news. But I did see, Cody, this actually ties in a little bit to what we were talking about this morning. They are this close to getting a route directly to Hawaii, which could reduce airfare cost on the islands out there. If you're taking vacations, that would be big news for Southwest fundamentally. Obviously, the airlines are selling here today and under pressure.
Man, I've been looking. I know someone that works for Southwest. They've been working on that for like 2 years, and they are getting close from what I'm hearing from the inside of Love.
Could you imagine this? I'm going to offend people that love Southwest here. Because people who love Southwest, especially people in Texas, and I love you, Texas. But could you imagine flying to Hawaii on Southwest, Tim?
I could never do it. No, I would lose my mind.
Are you kidding me? I had to take a flight from Phoenix to Salt Lake on a Southwest flight. And then I had to take one from, I want to say, Oklahoma City, and then I took one from I want to say Houston one time, and then I took one from San Antonio. And at that point, this was about a year and a half ago, I emailed my company. I'm like, never again.
I got to tell you,
I always feel like I'm being herded like a cow.
Yep.
I'll go off on this later. I had to have a conversation with my mother because she booked tickets for us on an airline, and she booked the lowest base fare that she could, Matt, which did not make me eligible for my first class upgrade. And
You pulled out your first world problems.
Yes, I did. As a matter of fact,
you went all. I am a frequent flyer, mother. I have status, mother, and I'm
And
losing it.
she had to remind me, Tim, you're from the country. Calm down. Relax.
Oh, that's good. Good
One
for Mom.
stock in the news here today is Kronos, Matt, CRON. Medical marijuana has been hot this year. Obviously, those pot stocks have been all over the place. Jumped up 28% on the news that Altria is investing $1.8 billion in the medical company for a 45% ownership stake. When a big tobacco company is getting into the pot game, Matt, that's interesting to me.
You know, Tim, I always said big tobacco would drive the marijuana game.
Yeah, I absolutely agree with that. Do you think big tobacco was going to stay out of this market?
Nah,
not a chance.
And you know what? Same thing can be said about the big banks and Bitcoin. And the same thing can be said about renewed energy and the energy companies like ExxonMobil and Chevron. Mm-hmm. Big business will come in where big money's to be made.
Yep, I agree with that. Some really big losers today. American Airlines down 7%.
I do want to say something though on Kronos. Does that legitimize this company a little bit more in your mind?
I think they're a legitimate company to begin with. They're just not tradable right now. Yeah, Tilray even as well, Matt. It's a legitimate company. It just got out of hand. This is what happens.
It's a legitimate $20 million company with a market cap of still like $12 billion. Okay.
I will say, looking at that company though, if we get from where it gapped up, if it makes a high base and then breaks that 14 mark, I'd trade that.
Kronos is something I think you should put on watch list. Tilray, another marijuana company here, showing a lot of resilience at $100. Every time that gets into $100, it does pop. So these are still new to me, too new for me to start putting on a watch list and actively trading. But I'm getting my interest is certainly getting peaked in both of these two companies.
Yeah. And even the whole industry to begin with. I mean, I think there's definitely going to be interest in 2019. There's no doubt about it.
And by the way, when I joke about a $20 million company being a $12 billion market cap, obviously that's because the market believes 10, 15 years from now that these types of companies will start to perform a heck of a lot better in the future.
Well, that's the whole thing with Uber, Matt. I mean, you look at Uber right now, it literally loses $1 billion a quarter or some crazy number like that. They're valued privately and they're going to IPO next year at like 40 or $50 billion.
Yeah, so, until 10 years from now when everybody's Ubering to work instead of driving their own car.
But that's why people believe that the $50 billion IPO is in play, right?
Well, and that's also why a lot of people who are new to the market, they're like, how in the world does this company have this much value? It's because the market believes it's going to become something bigger in the future. Same thing could be said about Microsoft in the 80s and Apple in the 90s, Tim.
Yeah, for sure. Top 5 losers on the NASDAQ today, Matt. Give me a rapid fire through these. Ulta, Beauty, ULTA down 10%. Ooh, ugly, gapping down. AAL. Yeah, that's why you got to pay attention to earnings, by the way. I mean, on Ulta, you wake up, your stock's down 10%, you forgot to check earnings. That's going to be a wake-up call. There's no doubt about it. Yeah. American Airlines down.
Same thing in Southwest, very similar.
NVIDIA down 5.5%.
Yeah, that's an ugly chart. Could pivot to the downside.
Netflix down 5%.
Yeah, that was a real good trigger.
Well, when it rallied back into 300, pivoted and triggered, it was clear that you were in a bear trend, bear push, right? And there's no doubt about that. And then Wynn Resorts, one of my favorite to the downside. I actually liked some of the reversal characteristics for a while, but when the market takes it on the chin, you're going to see a stock like Wynn down 4%.
It still has reversal characteristics.
I agree with that.
The other ones didn't, but Wynn still has some reversal characteristics.
Yeah, it's got to hold pretty much somewhere right in here, though.
I'll tell you what's been a little concerning for me, Tim, is a lot of these reversal patterns like Wynn, AMD, Baba, and a lot of those Chinese tech companies. A lot of those reversals that did trigger didn't have follow through.
Right.
Applied Materials, very similar.
Yeah. Well, we're in a bear push this week. I mean, you look at the performance on the market week over week, and obviously it's going to be hard to trigger.
Keep an eye on those reversals. Take for Applied Materials, for example. It got whipsawed on that this week, but take that one for example. Now that coming into the week, the market's at resistance. Coming into next week, the market's going to be at support. We bounce off support. Keep an eye on those reversals.
Yeah, I agree with all of those things. Give me the dollar index if you would. I know that you're going to be doing the Forex report this weekend like you have for several weeks in a row. Coach Keith out there attending one of Jake's events, so you're on again. Dollar sign DXY in that triangle. Matt, not a lot to see here.
Let me ask the halftime crew. halftime crude. What do you want me to write on in the Forex report? 2 weeks ago, I wrote on support and resistance, and I've wrote on market cycles. I've wrote on correlation. You guys give me a topic. What any topic you want me to write on in the Forex report that you need some help on currencies, done the basics of Forex, done all that. So you guys just keep listening, and I'll read their comments here in a second, T.
I would love to hear them as well. And then I'll also give you a couple ideas. There's several things I think that would be very, very cool to hear about, like the dollar index, for example, just the weighting of all the different currencies against the index, which ones matter, stuff like that. There's so much in the currency market, Matt. I didn't start trading currencies till I was a trader for 6 years or so, so I got into it later in my career.
About 6 years for me too.
Yeah. Obviously the dollar flat.
Shockingly, our careers kind of mirror one another.
It's true. Yeah. I guess when you talk every day, that's a part of that.
That's kind of how it works.
Yeah, for sure. Dollars flat in a range. I'm waiting for a breakout one way or the other, probably just like you. Let's go through commodities if you would. We'd talk crude oil already. Obviously, that's going to be the talk of the day, the OPEC cut and whatnot. Big rally, Matt, but you are now rallying into a falling moving average, and you have a little, compression there. I remember about a month ago when I did the Forex report when crude was up around 60 or so. And I said, guys, 60 is not support. 55 was support because of the old history, and 65 was resistance. Mm-hmm. That pivot at 55 that happened in mid-November broke down to 50. Now we've rallied back to this 55 zone, Matt. Obviously, a big green candle. You're not going to short on a candle like that or on news like this. If you are looking for a bull trigger, is 55 tradable? It's the question I have today.
It is.
Yeah.
It absolutely is. It's obviously slowed momentum. Okay. The bearish downtrend that was completely and utterly just devastating for oil was starting to slow down. Look at your pivot relationship, Tim. Look at the big downward movement. Look at a smaller downward movement. Look at the consolidation. Even the hardened bears in oil have to recognize that. Okay. So is 55 tradable on the upside? Absolutely 100%. Now, the question is it going to do it? We don't know either way. Crude has come up into these upper ends of these channels before. It's the first time it's really kissing a downward moving 20-day moving average. And I still believe that the better trigger is a trade under $50. But sometimes you don't get what you want, right? As a trader, you got to be prepared. A trigger above 55 is absolutely tradable, but I don't think it's the best trade. I still think the best trade is under 50.
You just inspired me to put on my Rolling Stones playlist. You can't always get what you want. I'm going to listen to that after our halftime report here today. Rocking out. Are you a Stones fan, Matt?
Well, more Beatles, but yeah, I like the Stones.
And I have been listening to Wu-Tang lately, so I've been
You've been embracing the Wu-Tang?
I love Wu-Tang Clan.
Wu-Tang's top three. Hey, listen, Wu-Tang is top 3 rap
number 1
group of all time. I can't put them above NWA. There's no way.
Crude oil above 55. Somebody else might trade along.
This is a better debate, NWA versus Wu-Tang. But yes, crude above 55 or below 50. Don't touch it in between.
I agree with that. I probably would still pass on a 55 trigger to the upside, but I could respect somebody saying that they would take that trade. I just see the significant pressure over time as something. It's fundamentally bearish.
Okay, then go down the path. So you pass on that above 55, which I totally understand. Let's say it goes at 55 to 57.5, retrace back down to 55, confirm at 55 at that point. I guarantee you'll make that trade.
Yeah, no different, but that's a different scenario, right?
Setup. Yeah. It's a break retrace, different scenario.
Sure. Looking at the other commodities, obviously when crude's going to bounce like that on the news, Brent oil's up 5%, nat gas up 5%, heating oil up 3%. Energy commodities are up across the board. Metals are also up here, Matt. Silver up 1%, gold another 0.7. We absolutely have been talking about that breakout on gold for a month now. It broke. It did catch a nice little move here. It is now in a bull run.
Broken ran. Love it.
Where's a profit zone for this, Matt? Where would you take if you're a swing trader?
1260.
1260 is a zone. I think so too. That falling 200, pay range up. Yeah.
1260, 200-day moving average. It's an old resistance level over here too. But if you look at this here, Tim, okay, and as a swing trader, this is an easy, look at this trend line right there, T. Look at that intraday trend line right there. Just keep that stop loss underneath that intraday trend line. Maybe you could go all the way up under 1250. But yeah, gold's doing what we expected. Love it. Love the break of 1240. Love the run to 1250. 1260 is next.
I agree with that. Obviously, metals are going up, energy's going up, even some of the grains and ag are going up as well. It's an interesting day for commodities. We'll have a full breakdown on the commodity report this weekend. And Matt, we're at that point, and I do want to have a little bit longer to do this deep dive on this topic. So I did try to rush and kind of, put my foot a little bit more on the gas here today. Let's get into our topic.
You got me off my discussion of NWA versus Wu-Tang way too quickly.
Well, we could talk about that later. By the way, I saw a ranker, a poll, and they had Wu-Tang number 2 and NWA number 1 in that ranker poll. People vote on it, and whatnot. So I think it's a legitimate debate.
That's how I'd put them. I love them both, but that's how I'd put them. NWA was so near and dear to me growing up.
All right. Yeah. What about
Mean Streets of Huntington, Utah, 1992, still in my brother's old Ford Taurus, rolling down the windows with me and my buddy Paulie, bouncing to NWA, acting like we're a bunch of, hardened gangsters back when we were like 13, 14 years old.
Small town kids.
Small town kids.
That's right. Today what we're going to talk about is the Tackle Portfolio Journal. And Matt, one thing that I've been liking that we've been doing lately on this halftime report is our deep dive into a topic each and every day. There's so much in this world of trading to teach. There's no way to teach it all in one day. There's no way to learn it all in one day, 1 week, 1 month, or even 1 year, quite frankly. I think people put too much pressure on themselves to be great at something that takes time. You take it one step at a time. And if anybody out there is looking for one actionable thing to start doing right now, it's to journal. Okay. And I know that journaling takes time. I know that journaling is tedious. I know that journaling feels like, oh, well, I don't know exactly what I'm looking at, but you have to journal the records in your trading so that you can learn from the data that you gather, whether or not you have good trading systems or bad trading systems or drawdowns, or if you're making mistakes. And I'll tell you, Matt, I had a coaching session with one of our students today, and you know him. I was talking to you about him yesterday when I was in the truck, and he had reached out to me, and I said, of course, absolutely, I can help you. Let me jump on Zoom with you, take a look. One of the things that shortened the time for me to be able to help him is he had meticulous records in his journal. And I found some of the problems almost instantly because he had journaled the records. And one of the journals that I love is our Tackle Portfolio Journal. First thing, Matt, show everybody where you can get it on the website, and then bring that journal up and let's kind of fill it out and talk about how we use it, okay?
Yeah. The gangster rap conversation got a few people thinking. Noah's over there singing Easy E tunes from 1989 right now.
I see it.
It's so funny. I can see Noah singing, Snoop Dogg right now. Sipping on gin and yeah, I got it.
Oh.
You don't even know what to say right now.
Oh, I do.
All right, let's talk portfolio journaling here. First and foremost, guys, this portfolio journal, you can go get it for pro members over there on the Tackle website if you don't already have it. I got to shut down the halftime crew for a second, or I'm just going to sit there and look at Noah making comments, on rap songs here. So looking at the Tackle Trading Portfolio Journal here, it's very simple to fill out first and foremost. But before we get into filling this out, Tim, let's just talk briefly about portfolio setup here in Thinkorswim, obviously the broker that I use personally as well. Now, Tim, earlier today, you and I basically put on a whole bunch of trades, cover calls, naked puts, swing trades, iron condors, just to kind of build a simulated portfolio, just to kind of show. First and foremost, when you first put up your portfolio, it will not be beta weighted. Now, the reason beta weighting is so important is that each one of these different positions here, DH Horton, Electronic Arts, Facebook, GoDaddy, GDX, Netflix, UNG, all of them have different volatility, and all of them move in a relationship to the market that is different, right? And that's what beta means. Beta is the relationship between the stock movement in comparison to the movement in the actual S&P 500. And if a stock has a beta that is known as +1, it means it moves a lot faster than the actual S&P 500. And if a beta has a negative number, under 1, that means it moves slower than the actual market does. So if the market moves 1% a day and XYZ company moves 1.5% a day, the beta would be 1.5%. So the reason we want to beta weight to the actual S&P 500 is if you don't do that, these numbers right here, especially the delta numbers, will be so radically different that it gives you a different type of understanding about how your portfolio is weighted against the market. So for example, if I'm looking at all these trades and we add up all these different trades, right? They all have different deltas. Some have a negative, those are bearish trades. Some have a positive, those are bullish trades. It says I have a 933 delta here, okay? So if I look at that 933 delta, what does that tell me? Well, if I come to the actual portfolio journal and the second tab over, you see here is delta weighting. So Tim, if I have a $50,000 portfolio here and I have a delta of 900, look at that puts me. That puts me into the extremely bullish capacity, which obviously I do not want to be. So if it says I'm extremely bullish, then that tells me I need to go make a lot more bearish trades, close out some bullish trades. But that's not an accurate number because it's not weighted against the actual S&P.
And pause for a second on that. Go back to that table because I think there's a really significant opportunity to teach something here. Guys, if you're bullish on the market, your account should be bullish. We said it earlier. If you're bearish on the market, your account should be bearish. I can't count the number of times I've had this conversation with a student. You're telling me you think the market's going down, but yet all you own are stocks. What are you doing?
All you own is GE. What's going on?
What's going on? You know, you're telling me you see what's happening in the market, but you're not making decisions to reflect the market. Yeah. Why not? And usually there's a gap in either decision-making or understanding or comprehension that we can fill that gap and we can teach that skill set. There's no doubt about it. But one of the reasons why I love this table, and I know you're going to beta weight and get an accurate number here in a second, but it does help us at least identify, am I bullish, am I bearish, or am I neutral? Because numbers don't lie. Numbers are right there in front of you, you know?
Well, and it's as a mentor, Tim, having somebody fill this out and tracking it and whatnot, it allows you to hold them accountable.
Yeah.
Right. Because when one of your students come to you and they're like, hey, Matt, I don't know why I lost money. I mean, I don't get it. I had a couple bearish trades on and, you know, I should have been making money and, you know, the market went down and I'd look at him like, man, your delta says you're extremely bullish here. What do you mean you were bearish? It's like, well, I saw the market breaking support. I'm like, well, you didn't take action. You didn't make trades. You didn't make adjustments. You didn't do the things that you needed to do. So the delta allows us to make those choices that we need to make sure our portfolio is in fact moving in line with the actual market itself. And so when we come back here to the delta weighting here, so beta weight to the spiders, and as you can see, now it smooths out that volatility in comparison to the S&P, and now it says I have 147 delta.
Now stay there for a sec. Stay there for a sec, because there's too much good information right here. Use that check mark, Matt, and just toggle it off and then back on once or twice so everybody can see the numbers change. So on the beta weighting check up here, so you take it off, you see the numbers go higher, you put it back on, it reflects that change. So the SPY is an important one to beta weight too, Matt. You could beta weight against other products.
Yeah, I can beta weight against AMD.
You can beta weight against anything, right?
Yeah,
so why do we beta weight
crude oil?
Sure. Yeah.
You can beta weight against anything.
Why SPY?
Because the spider is the barometer for the market, and you always want to be weighted against the S&P 500.
Ding, 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 ding. So it's the most common one we use. There can be reasons to use other ones, but if you don't know those reasons, just use SPY, right?
You always, when in doubt, use the barometer, and that's the S&P 500. So now we see what our actual number here at 147 is. So coming back down to here, where does that tell me? That tells me I'm in a neutral to slightly bullish type of setup, which means I should make money in a neutral to slightly bullish condition, correct? So if that's what my bias is in the market, neutral to slightly bullish, my delta is fine, okay? But if my bias is, say, bearish, that also tells me I need to take some action. Either one, I need to go buy some put options on the market, right? Or number two, I need to close some bullish trades. Or number three, I need to enter in some new bearish trades. So let's say I wanted to get smack dab, coming into the weekend, Tim, I was not comfortable with, the overall, a slightly bullish delta. It's actually neutral, but a neutral to slightly bearish, bullish delta, and I wanted to add more bearish trades. Well, that tells me I just need to add a couple more bearish trades. That's what it tells me. So this delta tells you kind of what you need to do going into the weekend or into any trading day with the types of trades you need to pull off, the type of trades you need to go find. Now, the second number that adjusted, Tim, here was gamma. So when you beta weight your delta, your gamma is going to change because gamma is a reflection of delta, and it changes the delta versus a $1 movement in the actual stock market. So, but we don't really kind of worry about that number. The third number over here is your theta number. That number is very important for a lot of theta type traders, for example. You take Marie, for example. Marie was on our halftime report last week. She is a dedicated theta trader. She does calendar spreads, covered calls, but mostly like credit spreads, iron condors. And so this number is really one of the most important numbers. And that tells me, Tim, that I'm making $37 a day in cash flow.
Mm-hmm. Yeah.
So it tells me. And so if if my target, my theta target is, say, I need to make $50 a day, well, that tells me what I need to do. I need to go find more bullish theta, more theta trades, more positive theta trades.
Well, and I think right here is an opportunity as well. You and I, we use phrases all the time like delta trader, theta trader, those types of things. Guys, if you're a theta trader and you look at your account and it's not a positive number, then you're not a theta trader. Now, you might think you are, okay? No. But you're not if you're not cash flowing. Now, there are times.
Theta traders, very quickly, Jim, a lot of theta traders like to keep this delta number as close to neutral as possible while they keep that number positive.
That's right. That's right. And there will be times where even a theta trader says, you know what, it's time to speculate. I mean, look at Netflix right there, Matt. Netflix has a negative 12 theta, but it's a great bearish setup. So you were willing to take a delta trade in your theta portfolio design here. See, being a theta trader doesn't mean you don't ever swing trade or speculate or take a delta trade. It just is all about that portfolio design, and they all kind of intricately work together. I love this conversation. I love it. Obviously, we grab these numbers and then we build them into the spreadsheet, right?
So coming back to the spreadsheet here. So the first tab is the portfolio total. So today is 12/7/2018. Let's say we have $50,000, not 20,000. Let's say we have 50,000. So we're simulating $50,000 account. Now, Tim, available funds. Okay. So if my available funds, let's just kind of over here. So available funds to trade. This is based on a $100,000 account. So we got about 24,000, and it's not taking the buying power effect, Tim, here on those swing trades, but they were about $1,300 to $1,500 position sizes. So it's about $30,000 in allocated. So if I have $30,000 allocated and I have $20,000 in available funds, that tells me I am 60% allocated, right? So and again, that's important to understand because cash is a position, Tim, and that tells me I'm 40% in cash right now. So as a trader, as a mentor, as an educator and whatnot, tracking that number over time and seeing win-loss and all that, that's important. So the next number over here is total amount of trades. So I just got to go count up my trades. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So we have 14 trades. Now, how many bullish trades, bearish trades, neutral trades? Okay. Now, you see the positive theta, positive theta, positive theta. That tells you those are positive theta. You see the negative numbers? Those are when you're buying options. Here on the delta, positive delta, positive delta, positive delta. Those are all bullish type of trades. Negative delta are bearish trades. The Russell 2000, that is a neutral trade. So I only put on one dead set neutral trade. I have some naked puts. Let me kind of show it to you here. So let's go back to new layout. So if you look at kind of the allotment of trades here, here's your single contracts. DH Horton, that's a naked put. EA, that's a directional put. You can kind of see the -4, that's a naked put. +2, that's a swing trade. +1, that's a swing trade. +2, that's a swing trade. -5, that's a naked put. +1, that's a swing trade. -4, that's a naked put. So I just wanted to quickly kind of show people that. But in terms of bullish versus bearish trades, bullish trades, you have 1, 2, 3, because naked puts are bullish. So you have 1, 2, 3 bullish there. And then all the covered calls are bullish. So that's 5. The bearish trades, Tim, I have 1, 2, 3, 4 bearish swing trades. And then I have 1 neutral trade. So we have, yep. So we have 8. Let me make sure. Let me double check that number. Okay, so 5, 6, 7, 8, 9. Got it. Okay, we have 13 total trades. That's where my math was wrong. So 8 bullish trades, 4 bearish trades, 1 neutral trade, which is the Russell 2000 Iron Condor system. Now, my beta weighted delta is coming back to, if I click on this right here and just go to old layout, that's the easiest way, is 147. My theta is 36. So coming back to the spreadsheet here, my beta weighted delta is 147. My daily theta is 36. And my market posture, I am neutral in the market.
Now, and by the way, if you put neutral, I would put a 0. I like the number. Yep. Yeah, and that's a bell-shaped distribution curve. And you'll remember, Matt, on the Tackle newsletter, we have that one infographic that explains how that distribution works: 0, -1, +1, so on and so forth. It's something I would definitely review each and every week. So here you've gathered one set of data. Now, if you're out there thinking, well, how often do I need to do this? Either daily or weekly, but I would be consistent. If you're a position trader longer term, let's say you do cover calls.
If you're an investor, weekly's fine.
But I would do it consistently. You know, if you're a trader where you have a daily routine, it only took you about 5 minutes to do that, you know. And
no, it would have taken me 5 seconds if I wasn't explaining it.
Yeah, that's right. And if you think about it, Matt, especially when you are now looking at this, there are several things we will learn over time as you start to keep these records. Matt, if your available funds goes from 20 to 40 to 10 to 20, like day over day over day, first question will be, well, what are you doing with the capital, right? If your percent allocated is all over the board because you're inconsistently trading, well, it's like, why are we getting in and out of trades so quickly? If you're in a bullish account right now, but you have a neutral delta, the first question I would have, and I know this was a hypothetical account, we just kind of built it right on the fly, is, well, why don't we move that delta down, right? Where should we add some bearish trades to better reflect a neutral position that you have on the market?
You certainly could. I mean, there's nothing wrong with that. I mean, if you're read it here, and again, 147 off a account value of 50, or excuse me, 147 off the account value of 50,000, you're in that slightly bullish to neutral range, right?
Yep.
And kind of coming into the weekend, Tim, and if I'm looking at, say, the S&P 500 here, and it's starting to come back into those support levels, I can understand somebody saying, I want to carry a neutral to slightly bullish delta because the market's coming into support. There's nothing wrong with that. So I would be comfortable carrying that delta coming into the weekend. But, if I wasn't and I needed to add more bearish delta to give me a little bit more neutrality, it's very, very simple. Go pick a couple swing trades. That's how you radically adjust your delta if you need on the fly. And honestly, one of the easiest ways to do it is, okay, if your entire posture is, I might need to protect against the market, well, watch this. I should have said, hold my beer and watch this. Hold my beer, watch this. So Tim, if I need to add more delta, and I just go buy 2 at the money contracts here on the spiders, and we come back to the monitor tab here, well, now what's my delta?
You just reduced it by 2/3. I mean,
and again, I want to ask the question to the halftime crew here, guys. I bought 2 contracts with a 49 delta. On a beta weighted portfolio, it dropped my delta by approximately 100. That's because you're buying 2 put options at a 50 delta on the S&P, which are beta weighted against the S&P. So all of a sudden, just by buying 2 contracts with a net delta of 100, drop my delta down 100 points, give me a dead on neutral delta.
First of all, in my estimation, as a mentor, coach, a veteran, this kind of stuff is more important than most things. I see too many traders that are making huge mistakes, not understanding their portfolio design or their risk. Now, this is an advanced topic, and I know that if you're brand new, you're not going to be ready to manage 14 trades or 13 trades and hedge them and all that kind of stuff.
Yeah.
But if you're 6 months or a year in, you've gone through courses and you're not keeping track of your portfolio totals and you're not designing it with intent or with some kind of structure, you're making huge mistakes. Download the journal, use the journal, start to understand the journal. And it's only one journal, by the way. The Tackle Theta research, where you evaluate the trades, is important. The individual trade journal, where you measure every trade, is important. This is your portfolio journal, right? When it comes to it, and allows you to start to understand your risk better, Matt.
Oh, I keep going. I'm not stopping.
What are you doing? Selling naked calls on?
I'm showing NJ. John. I'm showing John how to blow up an account while I'm drinking beer.
Oh,
that's what that was. So now look at this. Where are you? Only gave me 8 delta.
Yeah.
By the way, that's not accurate. Look at that theta though. Look at my theta.
Well, first of all, it's circumstance here. The theta is 666, mark of the devil.
We got to shut this down. God, that's terrible.
hold my beer while I blow up an account using the devil's numbers. But yes, John, that's how you blow up an account, by selling over leveraging naked calls on natural gas because you think it's overextended.
Agree. Brother, what you going to be doing the rest of the day? What do we got at Tackle Trading? And
well, my next 2 hours, I will be scanning. And we had a lot of people. Well, we had about 5-6 of our halftime crew join us in the scouting report meeting last week. Guys, a lot goes into creating those scouting reports for our halftime crew. And so the next 2 hours, I'm going to be scanning, analyzing every stock in the market, to be perfectly honest with you. And then we're going to sit down between 2 and 5 o'clock our time, and we're going to go over our scouting report meeting where we analyze the sectors, the commodities, the currencies, all those individual plays, give them, rank them and all that jazz. So got a full next 5-6 hours planning on the scouting reports. And tomorrow I'm going to write the Forex report. You're going to do the commodity report. And, we're going to have a lot of fun doing that this weekend. So, and then Sunday, I'm going to be watching football all day while I do more back testing on personal gold.
It's a lot, obviously, day over day over day, but it's so much fun building, the community in these systems and being a trader and a coach. Guys, I got to tell you out there, if you're watching this, today, thanks for being here. We do appreciate you being a member and a part of our community. Justin, one of our, most loyal, and Justin, it's good to see your name again. Do you recommend documenting this journal every day or once a week? For you, Justin, I think you should do it daily.
I would say Justin daily.
Yeah, you're an active trader. You've got enough going on.
Justin, let me answer it like this. Justin, you're a trader, halftime crew, do your job, fill it out daily.
Yeah.
If my mother called me up and said, hey, Matt, son, actually she calls me Matthew, how often should I fill this out? I'd say, Mom, I want you to fill that out once a month.
Right.
Because it's different type of investors.
Mm-hmm. The easy answer is whenever you make a trade, you fill it out. Have it open right there. Make a trade, fill it out.
Make a trade, fill out the journal. You should fill out that journal daily, though, if you're an active trader in any capacity.
All right. Yeah. And to find the journal, go to the Trade Center on Tackle Trading. Once you get logged in, if you're a pro member, you'll see a button that says journals. I do believe you need to be a pro member to get that journal, though. So make sure that you do sign up and get.
I agree with Adam there while I show this Army-Navy game, best pregame all year long. That's a cool game to watch too, Adam.
Hey, man, I'll tell you, I definitely could get down with the Army-Navy game.
Octavio, great question. Journaling daily at the beginning of the session. No, it's kind of like you look at your delta at the beginning of the session. You look at your theta and your delta because, Octavio, that kind of tells you kind of the types of trades you need. So take for example here, and I don't know if that natural gas trade came off the system yet, but yeah, it did. Okay, so if I'm looking at this and I have a theta of 25 now, and I know I need to get 50 theta, that tells me I need to find positive theta trades. Well, if I'm bullish in the market and I only have a 50 delta, that tells me I need bullish positive theta trades, like bull puts, covered calls, those types of things. So you want to look at your delta and theta when you start your routine, so you kind of know what to find, and sometimes it's in line and it looks really, really good. But others, you're like, okay, I know what I need. I need bullish positive theta trades. I need bearish positive theta trades. I need bullish negative theta trades, whatever it is. That tells you what you really kind of need to find. And then at the end of your daily routine, Octavio, that's when you log in the final numbers.
Yep. Markets are settling in here just as we leave the session. Matt, give me a quick intraday read on the S&P, or if you would.
Bitcoin bearish, Russell bearish, market is settling in. I don't think the market's going to do much between now and the end of the day, Tim. I think a lot of people are kind of like us. We're settled in for the week. But if you're looking specifically at the S&P 500 here, kind of settling in at that 2650 level. Let's drop it down into a 15-minute chart. Yeah, just a little slowing down, Tim. You could certainly break that 2643 and see some volatility down to 2620. But my anticipation, we got 2.5 hours in the trading day. The market has been absolutely crazy this week. Most people are probably settled in, to be honest with you, and that's what the market's going to do. But definitely be prepared for it, because if 2640 breaks, 2620 is a stone throw.
Well, and nothing that happens between now and the end of the day should make that